What's up, folks? It's like we haven't seen each other for a week. I know. You know, we could make the arrangement to where like we only visit once a week. The problem with that being is that we have to meet for 3 hours at a time. Does anybody want to try to endure 3 hours of auditing all at once?
Okay.
Yeah, so that's why we have three. Like I've taken my share of 3 hour once a week 3 hour courses, and they're pretty tedious. So yeah, nobody really wants to listen to me talk for that long period, including me. I don't know that I could talk for that long, although I've done it in the past. All right, let's go ahead and get some announcements out of the way. You'll notice I've got the syllabus up, so I got some stuff we need to talk about. So first and foremost, I have assigned groups for presentations. This is actually on Brightspace, but you can see here are the groups I've set you up with. If you have any questions about that, you can let me know. But like I said, split you right down the middle. So yeah, that group there, that group there. So and despite the advice, Brett, I did not put you in a group by yourself. You know, so yeah, please reach out to your group members. Start thinking about what topics you want to present on. And also there's topics listed in the syllabus that you can present on, and then also think about when you want to present. Just for context, we are presenting the final 2 days of the semester. There will be 2 presentations on Wednesday and 1 presentation on Friday. At least that's the plan. So that's where I'd like to set up for that. Let's go ahead and go through the calendar, see what we got coming up. So you'll notice we are on the 14th today, and there's a big bolded black thing coming up in about a week and 2 days. That's our second exam. It just seems like it's just kind of ramping up. Yeah. So we'll be covering the last 2 chapters today and Wednesday, and then have homework on Friday. We'll do our exam review on Monday, and then our second exam on Wednesday. So get prepared for that. That's going to be everything we covered since the last exam. So chapter 6 and 7, 8 and 9 will be kind of together. 17, 18, and 21. Those will be all the good chapters within the analysis. And yeah, so please keep that in mind. Stuff that's coming up in the future, but is not as immediate. We've got our Excel assignment that's coming up on the 8th of November. Again, the reason I mention that is because people tend to let that one go until the last minute. Please don't let that one go until the last minute. Make sure you start thinking about it now. Let me know if you have any issues, or let Matt know, my GTRA. And then we've got professional interactions that are going to be due on the 15th of November, so the week after. Then our third exam will be done be ready right before Thanksgiving. I sincerely apologize that I don't do the discussion until after Thanksgiving break. It was that, or basically schedule our exam discussion for the Friday before Thanksgiving. Traditionally speaking, I like to leave that open so people can take off that day. That's kind of been a policy of mine, is that people are just not terribly engaged on the Friday before Thanksgiving. They're thinking about the Thanksgiving. So most people want to travel. That's why we're doing the results discussion. That being said, everybody's going to be like, I'm going to be terrified about what I got an exam for a week. I'll try to post the results earlier so you can know what your results were, but we won't talk about it till after Thanksgiving. Related to this point right here, I had something come up that you need to be aware about. All right. So on the 11th, we will not be meeting in this classroom as a class. All right. Now, there's very specific reason I use that language. That does not mean that we will not have a lecture. It means that I will be that'll actually be on the so on the 11th. We haven't changed the syllabus yet, but remember, the plan is that we are actually going to do chapters 12 and 13 in one lecture. We're going to move the homework assignment up to the 14th, and we'll do 14 and 15 on this date. I have not changed the syllabus yet because I've not got official word from Dr. Caden, but hopefully we will have presenters coming in on the 13th. The presenters from the firms to come present to us, because the advisory board meeting is coming in. The reason I haven't changed that is I mentioned it in class, but I've not officially got word for it yet. If things don't change, then we'll still stick with this schedule. But if things do change, regardless, we're going to be doing something, chapters 14 and 15 or chapter 16 on the 11th. Regardless of what the situation is, we will not meet as a class on the 11th. The reason why is that I've got a research project that I'm working on that I have to be in another classroom at that time, and I can't be 2 places at once. So I will be recording a video, whether that's on chapters 14 or 15 or chapter 16, I'll let you know, and you will need to watch that outside of class. If you want to come to this classroom at our normal class time and watch the video inside the classroom so you can pretend like you're there, I'm there and everything, that's fine. You're not required to do that, but you are required to watch the video. It will be important for the exam. So I just wanted to make sure you're aware of that. I will keep you updated on that. Just because we're in that meeting does not mean you're not responsible for the content. The only reason I say that is the other option is that we completely cancel class on that date. And then we have class on the Friday before Thanksgiving. And my assumption is people are not really excited about that. The way that would work is that exam before Thanksgiving, the day before Thanksgiving, we'd push everything back a day. So that'd be exam 3 that we'd be meeting on the Friday before Thanksgiving. So that would be a way to break off Thanksgiving break, right? So is everybody okay with the concept of watching a video outside of class so we don't have to have class on that Friday? If you have a problem with that, let me know. Okay. If there's anybody who has an exception to that, then I'll cancel all my plans. All right. No, I'm joking. I'm assuming I'm assuming that everybody's going to be happier with taking the exam on Wednesday than rather on Friday. All right. With that, we are to chapter 18, which is audit reports, basically. So real quick, I used to print these out, but I don't do it anymore just simply because of paper concerns. I will be walking through, to some degree, these documents that are on Brightspace. This is an example of PCAOB audit reports. We are only going to talk about the PCAOB audit reports. There are technically 2 separate sets of reports. One of them is going to be for public companies, which is PCAOB, and another set is going to be for private companies or non-issuers, which is going to be the ASB reports. The only reason I do look the AICPA/ASB reports is because they're a nightmare to deal with. So we're going to deal with the easy ones. And easy, that's subjective, okay? Completely and totally subjective when we talk about what's easy, because it's contextual, because this is not easy as it stands. But yeah, when I'm going through that, you will want to refer back to that. Why do I have 2 syllabi documents open? It's weird. Okay. Why is it wanting to delete this? All right. I'm not sure what's going on. Okay. Get to see me in my old age and my absence of technological prowess. Okay. So let me just go ahead, PCAOB audit report examples. That's the document I want. So we're going to be talking about these here in just a bit. So we already know that once we finish the audit, we've come to a conclusion about the state of the audit, so the state of the audit client. If there are no material misstatements and everything with the audit went fine, generally we issue a clean opinion, an unqualified opinion. If there are problems, we issue something other than a clean opinion. But we've not talked about the context of the report which that opinion is issued. So today we're going to talk about all things audit report. I know that I'm going to go through it quickly, but I do want to make sure that you are aware. On the exam, there is going to be one problem. It's worth about 12 points, where I will give you an audit report and you will have to identify the issues with the audit report. To say that this is a small task would be it's not a small task. To say that would be a misstatement. It will require very detailed knowledge of the audit report. So even though I'm not big on memorization, I do think that a detailed conceptual understanding of what we're about to talk about is really important, particularly as it is relevant to the opinion that's being rendered. You do need to understand all aspects of that. So please pay close attention. Yes.
On the practice example.
Yes, there's an example. It's very identical in format and very similar to what I would ask. Obviously, I'm not going to ask the same question, but the practice exam contains an example of that. All right. So what are the elements of the audit report? What are the things that you need to be looking out for? So let me just talk about this quick. I'm going to tell you about 8 elements. If you know what these 8 elements are and have a basic understanding, you probably can score about 50% on that question. You can get it 6 out of 12 points. So if you're satisfied with that, you're like, I'm okay with missing 6 points. That's your judgment call. But knowing these 12 elements is a starting point. So what is it you need to know? First of all, you need to know every report has a report title. All right. And we're going to come back and refer back to the example reports here in just a second to show this. Then we have an appropriate addressee. So we talk about addressees with context to public company opinions. It's usually going to be the shareholders. That's who the addressee in that situation. If we're talking about private companies, we'd be using a different format, but the addressee would still exist, but that would be whoever requested the audit. Then we have the opinion that's being rendered, which is kind of silly. The way that it used to be is the opinion didn't come until the end of the report, but apparently the people at the PCAOB, they like spoiling the book before the novel's been read, okay? So they tell you what the opinion is, what the conclusion is. Then we have the basis for the opinion, all right? The basis for opinion is one section, but it contains 2 paragraphs. The first paragraph details the responsibilities of the various parties, which is going to be management and the auditor. The second paragraph details something called scope. So remember we talked about this thing called scope limitation? Scope limitation implies that there was a limitation on the job that the auditor could do. Scope details the job responsibilities, or the job tasks, I should say, not responsibilities, the job tasks. Okay, so responsibilities and scope are both contained in this basis for opinion section. Then we have something called critical audit matters, which we're going to talk about in more detail in just a second. This is a relatively new section. It's actually inspired by the IFRS key audit matters that they started adding. I shouldn't say IFRS, IASB, International Auditing and Assurance Standards Board. Then at the end of the report, we have name and signature of the auditor. Okay, I want you to make a note of this. Technically speaking, an audit report, this would include the printed name of the auditor, whether that be the auditing firm or the company, or the auditor, the firm itself, or the name of the auditor if it's a sole practitioner, like the name of that person. And then it would also have a signature associated with that. In the example reports that I will give you, I won't actually have a signature on the reports. That is not a deliberate exclusion. I just didn't want to try to write a writer or a signature on every single one of them. So if you see the name, you should assume name and signature auditor both present on my example reports. Okay, that's a disclaimer on those. Then we have auditor tenure. Auditor tenure basically says how long the auditor has been doing the work for the client continuously. We've already seen an example of that. We know that the Willis and Adams are earthware and clothier auditors. They've been doing it since 1976. They've been doing that audit since 1976. Then location and audit report date. I believe that's correct. We'll look at the actual report here in just a second. Location report date. Location is where it took place, the audit took place, and the date that the audit report was issued. So a lot of things that need to be noted. Like I said, this is the structure. This is the outline. This will get you about half of the way knowing this. Let's go ahead and take a look. We got all these elements. Let's go ahead and take a look at the audit report and see what that looks like. So this first version of the report, this is the standard unqualified audit report under PCAOB. This is what the report would look like if we issue an unqualified opinion to our client, which that's basically saying financial statements are good. They're free from material misstatement. So we set it up here. It says report of independent registered public accounting firm. There's our report title right here. This is the report title. The next line, to the shareholders and board of directors of Earthware Clothiers. This is our addressee. So our shareholders and the representatives of the shareholders, which is the board of directors. Then we have the opinion paragraph, okay, the opinion section, all right. The opinion section right here listed out, talks about what the opinion was. The opinion specifically is listed right here. In our opinion, the financial statements present fairly in all material respects the financial position of the company as of December 22nd and 21st. And the results, blah, 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 blah. Couple things to note about the opinion section. Most of the reports that we present on are going to be on consolidated financial statements, which means that they're not, consolidated financial statements, which means that we will not be looking at one point in time, but you would usually be reporting over a period of time. So for the balance sheets, usually it's going to be a 2-year period. And then if we're talking about the other items, then it can be a 3-year period. That does not mean that we audited all those items every single year. It just means that we're reporting on the results of those. So in this particular situation, we audited for December or for the year 2022. That was when the financial statements took place. But we're reporting on 2022, 2021, and then also for the statement of operations, which is the income statement, stockholders' equity, and cash flows for 3-year period. So 2022 and the previous 2 years. This is pretty consistent with how audit reports are given, just so that people who are using the audit reports can actually refer back to what the opinions were in previous periods, which will come up here in just a little bit. I will talk about this paragraph right here, but this is just an additional paragraph that gets included. This is one about internal controls over financial reporting. Okay, this is not a part of the opinion paragraph. This is just an additional inclusion paragraph, and we'll talk about the nature of this paragraph here in just a second. Then basis for opinion. Remember, I said basis for opinion contains 2 sections. We've got the responsibility paragraph, which is this one right here. The first sentence says the financial statements are responsibility of company's management. That's it for management responsibility, just that first sentence. The rest of this talks about the auditor's responsibilities, okay? Then this big long section right here, this big long paragraph right here, this is our scope paragraph. This details all of the auditor's job duties, everything that they did over the course of the audit. Obviously, to a general level, we're not talking about every single little task that they performed because it is boilerplate language. By the way, when you hear me say boilerplate language, that's basically saying it's standard language that's used on every single engagement. That's what that vernacular means. All right, next section is critical audit matters. Normally, we'd have a list of critical audit matters examples. I just didn't provide any examples here, simply because they're long and tedious. There's a lot of notes that go on here, so this is where they'd be included. This is all you're really responsible for, is the information up here, and then the critical audit matters are where they would be included. So critical audit matters have 3 requirements, even though you see only the numbers 1 or 2. The first requirement is, technically speaking, is that they were communicated or required to be communicated to the audit committee. Okay. Secondly, they relate to the accounts or disclosures that are material to the financial statements. And then thirdly, it involved especially challenging, subjective, or complex judgments. Okay. So basically, all 3 criteria have to exist in order for something to be considered a critical audit matter, which we'll talk about here in just a second. And then this is where the critical audit matters would be. In here, we'd have a list of what these critical audit matters are, and then what the auditor did in response to the critical audit matters. This is just an additional level of transparency that's been included in the report. Then I said we'd have the name and signature of the auditor. This is where the name would be, as well as a signature or representative, but we don't have the signature because I'm too lazy to write out something on a Word document. All right. We've got the statement auditor's tenure. I said 76, it's actually it's in 75. So how long they've been continuously auditing the client, then the location and the audit report date. All right. All of those listed out right there. All right, so those are the elements, but let's get into a little bit more detail onto what's included in here, okay? So I said we were going to talk about the critical audit matters, so let's go ahead and talk about the critical audit matters. Critical audit matters are matters arising from the audit that are communicated or required to be communicated to the audit committee and relate to items and material of the financial statements and involve complex subjective audit judgments. So 3 criteria, even though it's only numbered 1, 2, the first criteria is that one that they must be communicated or required to be communicated to the audit committee. And we say CAM, that's the abbreviation, CAMS. I'm not talking about a webcam. I'm not talking about Cam Shafts or Cam Newton, or apparently a country western singer named Cam, who I never knew existed until I found this video. Did an image search for Cam and this came up. So who knew? All right. Also in the audit report, we have something called explanatory language. And this is additional language that can be added to the audit report without changing the nature of the report, without changing the opinion being issued. So what are some circumstances? We've got modified wording, and then we've also got explanatory paragraphs. So add explanatory modified wording is just additional language that's added to the existing paragraphs of the report. So the items that are already in the report get changed or modified slightly. Explanatory paragraph means a whole new paragraph gets added. All right, let's roll up our sleeves and get ready. Here we go. Let's talk about the nature of these. Modified wording. There's only one situation where we actually have modified wording within an audit report. That would be an opinion based in part on the report of another auditor. Make a note of this. This is basically only in the situation where the main auditor is not willing to take responsibility for the other auditor's work. Where the primary auditor is not willing to take responsibility for the secondary auditor's work. So what does that mean? Means that there are multiple auditors in the engagement because the auditor client is large. Whoever the main auditor is looks at the work of the secondary auditor, and they have 2 choices. They can say, all right, we will accept responsibility for your work because we think you did a good job. If that's the case, no additional language is necessary. In the other situation, the auditor says, we think you did a good job, but we're not willing to take liability for the work that you did. If something went wrong on your end, you're going to be accountable for it. If that's the case, we have to add our additional wording, some modified wording to say, based on our work and the work of other auditors. That's the additional wording that gets added. So where does this get added? It gets added to the opinion paragraph. It gets added to the basis for opinion section. And then in PCAOB reports only, which we're dealing with PCAOB reports, so we need to do, we would also add an explanatory paragraph. So we add a bunch of different language. We add 2 different sections of modified wording, opinion, basis for opinion. We also add an additional paragraph, okay? Because we think it's important for that to be specified. Now with explanatory paragraphs, so this is the only situation where we would modify wording in the unqualified report based on circumstances. And that's exactly that language I just talked about. Based on our work and the work of other auditors. So that those words and the work of other auditors get added to a couple of sections in the paragraph. More common is explanatory paragraphs, and explanatory paragraphs is just additional paragraphs that get added to the existing report. What are some examples of that? You've already seen one, so let's go ahead and take a look at the one. Okay. This is a comment on the report of internal controls over financial reporting. So this is basically saying we also audited internal controls. Okay. Here's basically our responsibilities in that area. You should probably know that we issued an unqualified opinion on that report. That's what this is. This is an example of an explanatory paragraph. So that's going to be included in situations where there's an audit of ICOFR for public companies. Okay. Make a note of this. I will likely exclude this from the examples that you look at on the practice exam and the main exam. This is not to confuse you, just because I have limited amount of space and I don't want to include something that's irrelevant to my questions, okay? But in most situations, if we did an audit of ICOFR for a public company, we would include this paragraph. Another example is one we talked about already. It's a going concern. You guys remember going concern from last week? So going concern, basically, we believe that the company may not be in business a year from now, so we issue substantial doubt about the entity's ability to continue as a going concern. This is where we'd include it. We'd include it as an explanatory paragraph. Now, it's important to note, I talked about this last week, I'm going to say it again. This does not change the opinion being issued, okay? If the client has done everything else properly, if they follow the rules of GAAP, they can still have a going concern issue, but have an unqualified opinion. These are two separate items. Our audit is basically saying, are the financial statements accurate? Substantial doubt about the ability to continue, entity's ability to continue as a going concern is, will the company survive? Two separate issues, so they don't necessarily overlap. That being said, remember, as I said last week, say that the company refuses to acknowledge that they've got a going concern, that would be a violation of GAAP, okay? That would cause a change in opinion. But just the existence of substantial doubt does not necessarily create a difference. Does everybody understand the distinction? Okay. If there's substantial doubt about the entity's ability to continue as a going concern, and the client admits that there's substantial doubt in the financial statements, that's great. Okay, that's fine. It's not great for the company, but that won't change our opinion. If there's substantial doubt and the client refuses to acknowledge that, that will change our opinion, because then they're not following the rules of GAAP. But the existence of substantial doubt by itself does not change the opinion. Also, lack of consistency. So what does this mean? All right. Basically, the way that it's defined is comparability, but I don't necessarily like that definition because they don't use it consistently, no pun intended, okay? So we're going to talk about a change in accounting principle, change in reporting entity, or correction of a misstatement in previously issued financial statements. Those should all sound very familiar because those sound like exactly the things that you would require to a retroactive restatement of financials. Remember Financial Accounting 303? These are the things that Dr. Shonima probably told you that require retroactive restatement. Why do I say I don't like its consistency? Because there's a possibility that a change in accounting estimate could also cause additional language. Now, I put a little star here and I didn't define what that means. Basically, I've seen examples of both situations where an change in accounting estimate does not represent a lack of consistency, so we don't have to have an explanatory paragraph. I've also seen examples where a change in accounting estimate does require an explanatory paragraph. So you may say, what's the hard line rule? And I say, it depends. It is subject to professional judgment. For the most part, you can ignore this one. I'm not going to give you a situation like this on an exam where I ask you to make a judgment call. I think there's a homework question that actually may talk about this. For the most part, you can assume that this should be treated like financial accounting. But if it's a particularly relevant estimate, particularly if it's a material estimate, then it may require an explanatory paragraph, even though changes in estimate are treated for prospectively in financial statements. Okay, if you remember that from 303. Finally, justified change in accounting classifications, another possible item that would be treated for retrospectively. So anything that can affect the comparability of financial statements from one period to the next, we would want to include explanatory paragraph to explain the reason for the inconsistency. And then finally, additional emphasis. This is basically anything else that we think we would want to add any justification for in the report. This is kind of the catch-all. If it doesn't fall in one of these areas, it's going to fall into this area right here. So basically anything can change the language in the report. So there we go. Class done. Okay. Yeah. That's just basically the takeaway from all of this. So a lot going on here, a lot of stuff to remember here, but it's all really, really important for context. All right. So there we have it. We have the unqualified opinion. All right. And we're only 24 minutes into class, which means we got another 26 minutes to talk about everything else. So remember, when we talk about opinions, we're going to be talking about the nature of opinions with respect to not only if the financial statements are good, but what if there's a problem with the financial statements? So what were our other opinions? We have qualified opinions, qualified for scope limitation and qualified for departure from GAAP. This is saying that there is a problem, but usually it's just limited to one or two issues, okay? Then we have a disclaimer, that's our scope limitation, pervasive, large enough that we can't do our job. And then we have an adverse opinion, that's a pervasive departure from GAAP. I know you all were just really wondering about what the issues were with that respect to that. Let's talk about them really quickly. Now I'm going to go for this super fast, okay? Keep in mind that you are responsible for everything I'm about to tell you, even though I'm going through it quickly. So you may want to rewatch this video on like 50% speed, okay? So let's take a look at the reports. So first report, we have a qualified opinion. This is basically our changes. So let me go ahead and first of all back up. I would strongly recommend that you become very familiar with this report right here, because this is our baseline report. Everything that we're about to talk about is going to be with respect to the unqualified opinion, or the unqualified format. So using that as our baseline, let's talk about a qualified opinion for a departure from GAAP. So they do not follow generally accepted accounting principles, but it's a small issue. It's only material. It's not pervasive. What do we change? Well, we change our opinion, obviously, because it's a different opinion. So you'll notice here in red and in italics, except for the effects of not capitalizing certain lease obligations discussed in the following paragraph. So we see those words, except for. That's what actually specifies a qualified opinion. And then an explanation of the deviation. So two changes, two significant changes, and that's basically it, okay? Change in opinion and an explanation for the opinion. By the way, you will notice that the audit or the ICOFR paragraph is not here. That was deliberately excluded for space purposes, okay? Like I said, I did exclude that. It would normally be included in here as well, but I just didn't put it in here because I didn't want to use up extra space when I was really short on space and really short on detail. Everything else stays pretty much the same. So it's basically the unqualified opinion or unqualified report, just with a change in opinion and an additional paragraph. Yes.
The ICOFR paragraph, if it's qualified opinion, you would have to put reasoning, or you can say that we also audited the controls.
It would just basically say whatever the results of the test of controls are. So yeah, if you had a control opinion that's other than unqualified, you would specify it in that paragraph as well. Okay. But it's just basically a specification of what every report is. Good question. All right, qualified opinion with respect to scope limitation. So this is saying that we weren't able to do part of our job, but it was a limited scope, a limited issue, okay, small issue. So obviously we're going to change the opinion here, okay, just the same as we did in the other qualified opinion, except we're saying here's what we were not able to do, here's what we're not able to look at, and then we're going to explain what it is that we weren't able to look at. So same two changes in the qualified opinion for GAAP, but this is a qualified opinion for scope limitation. There is one other one that seems really minor, but it's likely that I will test you on it because it's a really important specification. So when we talk about scope, scope refers to our job duties. We were not able to perform all of our job duties because that's what scope limitation implies, correct? So in our scope paragraph, you will notice that I've got a little bit of an addition here, except as discussed above. Does that seem like such a minor issue? It is, okay, but the devil is in the details. So this is an important one to remember. We also have to modify the scope paragraph to specify we may not be able to do everything we described in this paragraph. Anything that's above is something we could not do, okay? So except as discussed above, we did everything down listed below. So that's a small change, but a really important one. Everything else stays the same. Everybody feeling comfortable so far? So 2 changes to the qualified for GAAP, 3 changes to the qualified for scope limitation. Let's talk about adverse opinion. Here's where things start getting hairy. All right. So not really a surprise here. We do have a change in opinion for the departure from GAAP. Keep in mind the change for opinion specifies the financial statements do not present fairly in all material respects the financial position of the company. This is the opposite of what we say in an unqualified opinion. In a qualified or adverse opinion, we're saying, look, financial statements are materially misstated. That's all there is to it. That's the language that's being used. You will notice that there's additional paragraphs here. There's always a question that comes up. Do we have to have 2 paragraphs if it's an adverse opinion? It says, no, that's just what this example entails. It could be 1 paragraph. It could have been 3 paragraphs. It could be any number of paragraphs, just whatever I think is sufficient for the explanation of the particular deviation. The only reason I have 2 paragraphs is that's the example that I used for this particular scenario, and they had 2 paragraphs instead of 1. All right. Basis for opinion, scope paragraph, those do not change. All right. So far we're consistent with what our qualified departure from GAAP. However, In a qualified, or sorry, in adverse opinion, we eliminate critical audit matters. And the reason for this, it doesn't seem obvious at first, but keep in mind the critical audit matters are anything that affected the course of the audit. There's no reason to include this paragraph in this particular report because we've already talked about the specific issue that affected the course of the audit up here, okay? Whatever it was that caused this adverse opinion is going to be specified up here. So there's no reason to actually communicate this down here. And then finally, everything else stays the same. So 3 issues, 3 things that we make changes in the adverse opinion. Opinion, we add the explanatory, or we add the additional, not explanatory paragraph, but the additional paragraph to specify what the nature of the issue was, or paragraphs, and then we eliminate critical audit matters. All right, does anybody need a break? Good, okay. We got a lot to talk about now. Get ready, here we go, disclaimer of opinion. Disclaimer of opinion is nonsense, okay? There are a lot of changes. Before I get into this, I want to specify one of the approaches you should take to disclaimer of opinion is anything that outlines the auditor's responsibility has to be modified, has to be changed, because a disclaimer of opinion says that we could not do our job. So the very first thing you will notice here is they add a disclaimer of opinion on the financial statements, not opinion on the financial statements, but disclaimer of opinion, and then follow that up with we were engaged to audit, okay? The very first statement in that paragraph says we have audited. This is in the unqualified opinion, but they changed this to we were engaged to audit. Why is that language change so important? Because we did not perform the audit. We could not perform the audit. That's what the scope limitation implies. So we were engaged to audit, but we couldn't do it. As a result, we're not issuing an opinion. We disclaim an opinion on the financial statements, or do not express an opinion on the financial statements. Unable to obtain sufficient appropriate audit evidence. All right. So change the title, change the first part of the paragraph, opinion changes. Then we have the detail about what the nature of this particular departure was, or what the nature of this particular scope limitation was. Then the basis for disclaimer of opinion. So instead of saying basis for opinion, we say the nature of the opinion. Financial statements are responsibility of management. Our responsibility is to express an opinion on the company's financial statements based on audit. You will notice that it's italicized and marked out. Why is that marked out? Because we did not express an opinion, okay? We can't have a responsibility to express an opinion and then not do it. So we have to actually mark that out saying, nope, that's gone. We don't have that responsibility because we're disclaiming an opinion. All right, next paragraph is going to be our scope paragraph. Remember our scope paragraph of job duties? What's the nature of a disclaimer opinion? A pervasive scope limitation? Probably means that we couldn't do our job. There we go. Scope paragraph is gone. Scope paragraph is gone. What about critical audit matters? Also gone. Okay, critical audit matters are also gone. And then we include everything else in here. So just summarize. Change the titles to disclaimer of instead of just opinion. Okay. Change the first part of the first paragraph to say we were engaged audit. Change the opinion. Add the description of the change in the opinion. Eliminate the statement on responsibility in the responsibility paragraph for the auditor. Eliminate the scope paragraph. Eliminate the critical audit matters. That's by far the most gruesome of them. So it's possible that I may ask that for you on the exam. Okay. Again, keeping this context to the original audit report is probably the key to this. Keeping a context to the unqualified audit report that will actually help you with the format. It actually seems like it's daunting and tedious, but with repetition, it actually becomes pretty straightforward. The first 3 types of reports, or sorry, the first 4 reports are pretty easy. This is the one that's really challenging, but it's not that much. It just seems like an awful lot. All right. Let's put this in context now. So keep in mind that materiality plays a role in the auditor's choice of audit reports, and we use the term pervasive to describe the nature of the effect of a potential effect of scope limitation or departure from GAAP. Pervasive is always the worst situation. Pervasive basically means that this is so extreme that we have to issue an extreme opinion. So if it's a pervasive scope limitation, it's always going to be a disclaimer opinion. It's a pervasive departure from GAAP, it's going to be an adverse opinion. That's basically what we're talking about. So when we talk about pervasive, what does that mean? They aren't confined to specific elements of the financial statements, so they're widespread, or they could be confined to a specific area, but that area represents a substantial portion of the financial statements. For example, if we had a pervasive misstatement in inventory at Earthware, we'd probably say that that could be an adverse opinion because inventory is a major account for that particular company. Or if they're disclosures, they are fundamental to users' understanding of the financial statements. So important disclosures, important representations made by management of the financials. All right, so we are now, what, 35 minutes in? The most important content of this particular lecture we've covered. So this is the first 35 minutes, or probably the after the first 5 minutes, because I did a lot of rambling about course deliverables and stuff like that. So the last 30 minutes, that is the most important stuff you should focus on for this chapter. But when I say it's important, I mean it's really important, because there's actually 20% of your exam will absolutely come from this content. I've already told you 12 points on the next exam. That's 20%. So if it's 12 out of 20 out of 60 points. So you do need to know this, plus there will be additional questions in this area. Less relevant is about what I'm going to cover, so I think this is less important, but still stuff that we need to cover for comprehensive context. So what are some special reporting issues? We got reports on comparative financial statements, other information and documents containing audited financial statements, and special reports. So let's go over each of those in turn. So as I said before, we present our financial statements for audit reports on a comparative basis. That's comparing performance in the current year to previous periods. Usually the balance sheets are done for 2 years and the other financial statements are done for a 3-year period. That's the examples that we're going to look at. If there are differences in opinion from prior periods, they should also be clarified in the auditor's report. So say, for example, you have an unqualified opinion in the current year, but you had a qualified opinion in the previous year. You would need to specify that in your audit report, that just because the current period is unqualified does not mean that every period was unqualified. If that was the case, we need to specify that a qualified opinion was issued in the previous period. That's the language that would be changed in the audit report for comparative reporting. Usually these are going to be expressed in an explanatory paragraph. That would be one of those other matter issues that we talked about for explanatory paragraphs. All right. What if we have a predecessor auditor, okay, that actually issued the report and they had a different opinion? Well, in order to understand this use of comparative financial statements, I said different opinion. If they had the same opinion, that's fine. But regardless of what happens, if there's a predecessor auditor and we would like to use their statements for comparative purposes, they need to do a couple of things, okay? They need to read the current period financial statements so they understand the comparative, whether they can be used for comparative purposes, compare them, and then we're going to obtain a representation letter. And basically what that means is that we're going to say, the representation letter is actually going to be addressed from the current auditor to the previous period auditor, saying, we would like to use your financial statements for comparative purposes in the current period financial statement audit. And if the prior period auditor agrees with that, then we can agree to actually utilize those statements. Now, if the prior period audit says, no way, we're not going to let you use our information, we cannot present them on a comparative basis. We're not allowed to do that. It's only if the prior period auditor agrees to that particular situation. What about other information that's included? Okay, so beyond financial information presented, the auditor has no responsibility for information contained in annual reports and registration statements and the like. Okay, so has anybody ever actually looked at an annual report? Not a 10K, okay, not the actual financial statement filing, but an actual annual report, a shareholders report. So here's an example of McDonald's shareholders report from a few years back. Okay, this is actually how it was presented in the PDF that I read. All right, look at this. Isn't that gorgeous? That is the best looking Big Mac I've ever seen in my entire life. I've never eaten a Big Mac that looks this good, okay? This was definitely made for the camera. I'm sure those lettuce slices were curated to go in exactly the specific spots to make it look appealing. If you ever read a shareholders report, an annual report for shareholders, they are beautiful, okay? They are sunshine and rainbows, and they give you hope for the future, all right? The important point to note is that our clients are not allowed to fabricate information in the annual reports just because we don't have responsibility to audit. So when an annual report or other information, registration statements, external disclosures, any information that uses financial statements from the audited financial or financial information from the audited financial statements, we as the auditor have to read the other information and consider whether it's consistent with the audited financial statements. So within this McDonald's report, if they lost $1 billion, they can still present a picture of a Big Mac on the front saying, aren't we delicious, okay? But they still have to be consistent saying we lost $1 billion this year. Sorry about that. If they try to say we actually made $1 billion, we as the auditors step in and say, yeah, you're lying and that's not cool. Okay. That's our responsibility here. So with respect to special reports are basically going to be audits that occur on a basis other than what we previously prescribed. So full financial statements based on generally accepted accounting principles. Practically speaking, if can we perform audits on other bases? And the answer is yes. We can perform financial statements based on accounting other than GAAP. Okay, so cash basis of accounting would be a good example of this. We can also perform audits over specified elements, accounts, or items in the financial statements. Okay, or we can perform compliance and contractual agreements or regulatory requirements. So these are audits for compliance, not an audits of financial statements. Now it's important to note here, these are different from the PCAOB prescribed financial statement audits. We cannot substitute those requirements. So if we're talking about a public company and they say, we would rather you not perform a full financial statement audit this year, can you perform an audit of just the income statement? If they're a public company, the answer is no. You have to perform the full financial statement audit. But if we're talking about a non-issuer, or if we're talking about even an incremental audit, something like maybe a half year that took a periodic audit, it's possible that we could perform this for other particular scenarios. We could actually do it on a basis other than GAAP, or we could do this for specified accounts or elements or disclosures, whatever it may be. With respect to that, reporting on a basis other than GAAP, those are going to be called special purpose frameworks, okay? Auditing standards define special purpose frameworks as financial statements prepared on the following basis: regulatory basis, tax basis, cash or modified cash basis, and contractual basis. The only real difference here is that when we're auditing these, we have to make sure that the client is following the rules under the basis that they're reporting on. So remember in our examples, we say they did not follow the rules of generally accepted accounting principles. That's okay if they're reporting on a different basis, but we have to make sure that their reporting and their results are consistent with whatever their special purpose framework is. So if they're using tax basis as their reporting basis, we'd need to audit on a tax basis, which would be really awkward because that would involve both audit and tax, and I'm not sure how I feel about that. Okay. All right. I was really worried we're gonna have time, and I'm on the final slide. Yeah, you go me. All right. So other notes regarding a special report. So an auditor may be engaged to report on only specific parts of the financial statements. Again, this does not mean that this is a substitute for a financial statement audit. If a financial statement audit is required, as is in the case of public company audits, this cannot be used as a substitute. However, if we're talking about a non-issue audit where a bank says, we would like you to audit the balance sheet, or we'd like you to audit just the income statement, we can perform audits in those areas. We could perform audits of just a particular part of operations, a particular account area, or the disclosures. We could do an audit of MD&A. All of those are certainly possibilities if contracted to do so. Rather than auditing specific elements, accounts, or items, auditor may also be engaged to apply only agreed upon procedures. Agreed upon procedures, we're going to talk about those in more detail on Wednesday. But basically all that means is that we're going to actually reduce the level of assurance that we provide, and we're going to perform very specific tasks according to the nature of what the client requests from us. Now, agreed upon procedures can actually vary in scope and go into whatever detail we want, but usually they are less stringent than an audit. Then finally, for compliance engagements, which are contractual agreements, regulatory requirements, the auditor can actually perform engagements of this nature. When they do so, they usually provide less assurance than we would encounter in a financial statement audit. And we're going to provide something called negative assurance regarding the client's compliance with the rules and provisions. So compliance basically says, are they following the rules and laws and regulations in their area? And we can actually perform engagements to test the compliance. There are certainly areas that we can perform compliance audits, which as it sounds, is going to be audit level of assurance. Or we can do engagements where we do lower levels of assurance, where we don't necessarily provide as high level of assurance. So what's the type of assurance that we provide in audits? Does everybody remember that? It's not absolute assurance, it's reasonable assurance. Good. Reasonable assurance. That is the highest feasible level of assurance that we as assurance professionals can provide. You will notice it says negative assurance up here. This is considered to be limited assurance. And basically what the difference between that is that for high levels of assurance or reasonable assurance, we say the financial statements are free from material misstatement. We're making a positive assurance statement saying we are positive that this exists, this situation exists. It's only reasonably certain, but we are certain, okay? We're reasonably certain. Limited assurance is a lower level where we say we tested this information and we did not find anything wrong. We're not making a positive statement, we're making a negative statement. Nothing came to our attention that was noteworthy. Now, think about this just rationally. Would you be more comfortable if I said everything's fine or if I said nothing's wrong? You say there's no state difference in those statements, Dr. Barnes says, well, there is technically a difference in those statements, and that difference is really, really scrutinized by professionals who utilize information in this area. Saying everything's fine tends to be a stronger statement than said, I didn't see anything wrong. Okay, and that's kind of the subtle difference between these particular statements. And with that, we're done with this chapter. I apologize for speeding through, but I was really worried about finishing in time and I sped so quickly that we got to there. But again, please remember that this is a really important chapter for the context of this course. Please make sure that you spend sufficient time studying the format of the audit reports and you're prepared to answer questions on those. I will see you all on Wednesday for chapter 21.